Gill. Thanks, Julian. Thank you to the Sydney Mining Club and sponsors. I do feel very honoured to be here when Julian asked if I would talk, and thank you for taking the time. Julian set me a hard task to share with you, I guess, two stories. One here and now, which is the LionGold story, and to just give you a bit of flavour of that business. And then, as Julian said, an event that happened now over 7 years ago, but I think still has some underlying messages, and probably more the benefit I would like to share with you is just thought-provoking, so that you think about your own situation and how prepared you might be. So LionGold, the normal disclaimer, I never make any apologies for a disclaimer, and the idea of looking forward is of course very important in any industry. So who are we? I think a fundamental component of LionGold is that it is the only main board listed gold stock in Singapore. And there are a lot of other contributing factors to its current success. But when you consider, and there are probably a lot of people here that know that equities have been hard hit, gold mining companies, certainly juniors. There is still a lot of interest in gold, a lot of money, but it seems to be in Asia. And LionGold is the only game in town in Singapore if you're interested in gold. And if you get the Asian love of gold and gambling, and you have a company like us, we I think are certainly a beneficiary of that. We're now over $1 million US $1 billion in market cap. A key is its liquidity. It's $20 million Singapore a day, and that's its currency. So the strength of LionGold in a lot of ways is its liquidity and share price and its strong market following. It certainly, from a share price performance point of view, got a kick in that when it became part of some indices, and superannuation funds and the like often just follow the indices. And as I said, and critically, being the only gold stock listed on the main board in Singapore. And that's quite an unbelievable share price graph. I haven't seen any other share price graph of a gold stock that's gone like that. Most people in this room will probably know that they've tended to go the other way. And that's the LionGold story that I guess I'd like to share with you. Over 2 years ago, the LionGold didn't exist. It was known as Think Environmental. So it was a listed entity on the stock exchange in Singapore. But the directors at that time realised that it wasn't going to do a reasonable return to shareholders. So it changed its strategy, changed its name, called a special shareholders meeting, and LionGold was born. And the early days were with some pain in terms of feeling its way, trying to grow a gold business. And we are here today, and I'll run through with you what we've achieved in the last year to 18 months, our geographic spread, what interests us as a company, and what we're looking to do going forward. It has some operations which I'll walk people through. Its first acquisition was, and it's a 77% shareholder in ASX listed Signature Metals, which has an operation in Ghana. Second main acquisition was Castlemaine Goldfields in Victoria, which is how I came to join LionGold, and a few others, including an operation in Bolivia that I'll touch on. And we also have some major shareholder holdings, including two, well, and will be three companies here in Australia. Has a fairly large board made up of our MD and CEO, who's an ex-investment banker, our general counsel. We've got some non-executive directors. Two are Australians, of which one is here today, Dennis Clark. Some people may know Dennis from his days in Plutonic and recently with Hill End. He's on the board, bringing some geological expertise. We also have Gary Scanlon, who some people may know was the CFO for Newcrest for some 7 years. So it's a mix of technical and commercial people, and there's an executive team that includes myself. Shareholder base, two of the directors, so the chairman and one of the non-exec directors in particular, have a large holding in the company. Asia Sons is a private equity group based in and listed in Singapore, and the Van Eck Market Vectors group in the US. So a spread of our projects, and while my home is just out of Ballarat in a shocking suburb called Magpie, given that I'm a Carlton supporter, but I have to live with that. That's what happens when you marry a St Kilda supporter. So half my time is based in Victoria, but I do travel clearly. We have acquisition pending of a exploration company called Acadian in Nova Scotia. We have 100% of an asset and Bolivian company called Minera Nueva Vista, and my Spanish is picking up, and I'll share with you a bit of that. The Ghanaian operation that I mentioned, we have stakes in Unity, which has the Henty mine and building a gold mine in Dargs Reef in New South Wales. We're the major shareholder in City Gold in Queensland. We've just entered into an agreement with A1 Consolidated in Victoria, and of course Castlemaine Goldfields, which is our producing entity and which I was and still am the MD and CEO of. Our objective is to, by the end of next year, have built a company with resources of 10 million ounces, reserves of around 2 million ounces, and a production profile of around 200,000 ounces per annum. And you can see in the last 18 months we're a fair way down that track. We've acquired projects, as I said, 8 projects that accumulate about 7 million ounces. We're building our reserve base, and our focus at the minute, and that's a combination of our objectives, but also the current market, is in the producing asset space. And you can just get a sense there of the growth that we've had from a cold start over 2 years ago to where we are today. And as I pointed out in the graph at the bottom there, where our focus is now is to build a stronger producing base than we currently have. And we'll do that. LionGold is an amazing company, not just its financial strength, which gives us the ability to go shopping in the current market, but we are exploring. We are an explorer in Ghana, we are a developer in Bolivia, we are a producer in Castlemaine, and we're also an acquirer. And that's quite a broad spectrum and a great way and a great position for a company to be in, to be able to have that support, to be able to cover that spectrum in a growth profile. That's just a bit of a schematic on how we've grown, as I said, from a cold start 2 years ago. Last year was quite busy. As I mentioned, our first acquisition was Signature, then Castlemaine, Brimstone, which is a small explorer with tenements both in Western Australia and Victoria, City Gold stake, Henty, and as I said, closing a deal with Acadian at the minute. And most recently, within the last month, taking a major stake in A1 Consolidated in Victoria, and entering into a toll treatment arrangement where their ore will be trucked about 300 kilometres to the Ballarat Gold Plant for processing. The graph shows the opportunity that we look at, and it's really the junior index market compared to gold price, and there is a huge disconnect between gold price and valuation of gold companies at the minute, and most people are probably aware of that. And that's our opportunity to look at good assets that have good people but require funding to get off the ground. And in the current climate, that can be particularly difficult for junior companies to raise. And that's where we believe that LionGold can assist in that financial backing and support. When LionGold first commenced its M&A acquisition strategy, it was looking in the pre-feasibility, feasibility study range. So advanced projects, preferably with a JORC resource or a National Instrument 43101. Roll the clock forward 18 months, and now we see that there's producing entities that come into the same target range in terms of valuation and price. And so we've shifted upwards from the more advanced greenfields into near-term development producers, or in fact those that are producing. Excuse me. So the sorts of criteria, as I said, in terms of producing, I think it's probably fair to say that there's an argument that you need 100,000 ounces per annum, but I think finally a lot of the market and the institutions are coming to realise that there is an argument for quality over quantity, and that I would prefer to make 50,000 ounces with a healthy margin than 100,000 ounces and maybe not make a margin at all. But we do think that there needs to be a sort of a minimum production level, obviously, for it to be sustainable. So we look at the sort of 50 to 100,000 ounce per annum range, but it doesn't mean that we wouldn't look at things smaller, and we have, and it doesn't mean that we wouldn't look at things that are bigger, and we have. Clearly, it would be nice, and again, there are variations on a theme. You know, it's nice that it's got a solid base of around 1 million ounces, and the classic divide by 10, you know, to give you a 5 to 10 year mine life type of scenario. And I'm sure there are many M&A business analyst people here in this room that have similar criteria within their company when they're looking to screen for M&A opportunities. And as I said, what LionGold can bring is its, and I say this, and I'm a mining engineer, is its richly valued paper. You know, the share price has increased. We're over $1 billion market cap. But I do get analysts come up to me and say, okay, tell me about LionGold. You've got some resources, that's fine. You've got some reserves, that's fine. You're producing 40,000 ounces per annum, and your market cap is what? And my comment is, and I've tried to explain that on typical valuation metrics, you don't tend to be able to close the gap between the underlying assets that LionGold have and its market cap. But it is what it is. The market cap is real. The Singapore Stock Exchange is a serious and significant stock exchange to be on. The liquidity is real, and I've been quoted as saying, get over it. That is the LionGold story. You know, it is the only gold-listed stock in Singapore. There are some intangibles that give it its valuation that in a normal, typical technical sense you can't explain, and I don't intend to stand here and try, other than to share with you my observations. But that's what we believe that LionGold can bring to a two-way development of a project. We're not an aggressive acquirer. We don't believe in being hostile. The companies that we talk to need to share the same vision and view and see the same opportunities, and then anything, I believe, is possible. Just a quick snapshot of our balance sheet, because people have said, well, how are you going to fund your growth acquisitions? Just recently a private placement, $200 million in this current market. Probably not many people able to do that. And there are other institutions. There is a momentum. There is a, you know, success begets success, and people are certainly keen on the story and wanting to be a part of it. So we believe we have the finances to go forward and to raise funds if and when necessary to advance that. So just briefly on the operations that we have, Castlemaine Goldfields. So some people may be aware Castlemaine bought the Lihir asset, Ballarat, from Lihir, and we're currently producing at the Ballarat Gold Mine. We didn't follow the Lihir objective of 200,000 ounces per annum. Again, a classic story. We've gone more for quality over quantity. We're producing 40 to 50,000 ounces. But our costs are under $1,000 an ounce, and happy to make a margin on that. We also have some exploration tenements, so we're not just producing, we are also exploring in Victoria. Consolidated is a good example of our opportunity. When we bought the asset from Lihir, it had a 600,000 tonne per annum gold processing plant. Given our quality versus quantity objective, that plant is only operated 3 days a week. So it has idle capacity, and we've been able to, and the A1 board share our vision for growth. So we're doing a placement with them to help fund them the rest of the way into production, and we've entered a toll treating agreement where they'll truck 6 gram per tonne material to the Ballarat plant for processing, and really good example of a win-win for both companies. Unity Mining, we're a major shareholder in Unity. Unity have Operation Henty, and as I mentioned, are developing a project in New South Wales, and we see clear synergies And if you look at a hub concept of, and you'll see that LionGold building a presence in Eastern Australia. And Citigold is the other asset, major shareholder, Citigold being the Charters Towers resource. Signature Metals was LionGold's first acquisition. It's on the Ashanti Shear. It's 80 kilometres north of Anglo-Ashanti's Obuasi gold mine, which has produced 30 million ounces in its own right. It has a processing plant that's on care and maintenance while we do an aggressive exploration program and are currently conducting a scoping study. And Bolivia, it's important to recognise, I guess, in building an operation portfolio to have a spread of risk and geography. And certainly Bolivia is one of the interesting countries. And it's interesting what people know or don't know. My only knowledge of Bolivia was that it changes government every year, and it's where Butch Cassidy and the Sundance Kid met their end. You get on the ground, and Bolivia is quite an amazing country. It's you know, the Spanish history, the indigenous history. It's very structured, very respectful, very legal, Napoleonic law. And yes, it's had some interesting political history, but I think reality is showing that, and our opportunity is as a first mover into Bolivia. You know, we build a gold mine, we'll be the only thing that's happened there in the last 5 years. So we see it as a great opportunity. It was a cheap acquisition. There is risk, but with that there is also, we believe, good return. Acadian I've mentioned on the Eastern Canada, where we've launched a cash takeover for the remainder of the shares that LionGold don't have. And again, we see that as taking a foothold in a good, stable jurisdiction with great mining opportunity. So we set about last year in our acquisitions, and you'll see that we have returned on share price return to shareholders. This year is a very busy year, and you've seen, and we will continue to develop our current operations and also look in the M&A space. And as I said, our target by the end of next year is to really be a substantial gold producer. We're already one of the largest gold companies in Asia, and certainly we are in Singapore, and we want to continue that momentum. So I've touched on looking in the acquisition space, project progression, so Amaya-Pampa in Bolivia, as I mentioned. Conongo is our Ghanaian project. And again, just in the last month, we've signed a memorandum of understanding with a large Chinese company that bring with them both financial support but EPCM, so engineering design capability, as another great example of a partnership and a win-win opportunity. So that's the LionGold story. And now for something completely different.